Mike Sullivan. I'm a former IRS agent and teaching instructor with the Internal Revenue Service. I worked at IRS for a decade. I've been in private practice for 4 decades. I've been doing this year for 50 years. This is the home of the 5-minute video. I tell you everything you need to know in 5 minutes. Just a little about me. I've worked thousands of cases. I've been on national TV many times. You can see my interviews on my website at 777irs.com. And I started these videos for 3 reasons. A couple years ago, I was looking at some of the YouTube stuff that was out there. I says, man, some of these people don't really know what they're talking about. So he says, what the hell, I'm going to give this thing a go. And yeah, I got a bunch of subscriptions and a bunch of members and a bunch of people that give me ideas. I just kind of let you know the inside stuff that IRS thinks about, and at least you're going to know the truth. We are available for representation. You can see me in the description section below on how to contact me. You know, IRS, today I want to talk to you about IRS debt. As a former revenue officer for 10 years, it's all I used to do was collect IRS debt. There's a lot of other things you do, but one of the main things you do as an RO, you're dealing with debt. And I want to tell you there's 5 ways of dealing with really IRS debt, and I just want to take a couple minutes. Like I said, my videos are no more than 5 minutes. I'm going to talk about the 5 ways that your case can probably close with IRS. Let me just go through them really quick. They're currently non-collectible, payment agreement, the filing of an offer in compromise, the statutory expiration of your statute, and the filing of bankruptcy. So just let me go over all these things with you real quick, and so you'll at least know you can contact us if you have any further questions. People do not know that federal taxes are discharged in bankruptcy. There's a couple federal rules you have to follow. The taxes have got to be 3 years or older, filed for 2 years, and assessed for 240 days. And if that meets you or you have a question about that, you can see a bankruptcy attorney, and you can get taxes 3 years or older. Assessed for on file for 2 years and assessed for 240 days. You can discharge those. The others are statutory expirations. IRS has 10 years to collect the debt. If you didn't extend the statute under any circumstance, that the debt goes away in 10 years. If there's a federal tax lien, the tax lien goes away actually in that 10-year period of time. The third way is you're currently non-collectible. And really, the currently non-collectible, the payment agreement, and the offer and compromise all kind of work the same way. We'll talk about the payment agreement first. You can go online and get a streamlined payment if you owe IRS money, and you can go online, and if you owe $50,000, $60,000, you can make a payment agreement directly online. If you can't make a payment and those payments are too high, you can give IRS a financial statement, and they'll work out or will work out a payment plan with IRS. About 6.5 million people a year enter payment plans with IRS. About half of our practice is involved in getting people payment plans. They can't pay all the money. IRS may want more than you want to give them, so we negotiate a payment plan for you. The other thing is you can be put in currently non-collectible. If you're going to be put in currently non-collectible, IRS pretty much is going to look at a financial statement at the service center. They'll look at the financial form 433F at the local office. They'll look at the form 433A, and then they will determine whether you can pay or not. How does IRS determine that? IRS looks at your financial statement. They look at your asset base, and more importantly, they look at your current living expenses. What people don't understand is IRS does not let you just spend money where you want. IRS is going to make sure you're within your living expenses. So the Department of Labor does this. They do this for bankruptcy purposes and a lot of other reasons. IRS determines what they allow you to live on. If you look at a financial statement, IRS will ask for your living expenses, and there's another column on the 433A that says what they're going to allow. You must know what the national standards are for IRS to go ahead and put you in non-collectible. So you may want to call us. I think I've done something on the national standards. You can go ahead and look at that. There's a black cat just passed, so that's really good luck for you. And the third and fifth thing is the offer and compromise. I taught the offer and compromise program at IRS called the debt settlement, where you can go ahead and submit an offer and compromise for pennies on a dollar. Just a couple things I want to talk to you about the offer, because I used to accept offers and deny offers and compromise. So if you have the assets to pay the tax, IRS is not going to settle for less. If you have $100,000 in assets and you only owe $80,000 in tax, IRS is not going to settle the debt. You must give IRS the worth of your total liquidity for IRS even to consider that. IRS will also look at your income and expense to find out if you are living once again within your means. IRS once again has this national standard test that you kind of pass, that you must be living within what IRS figures your budget should be within the county that you live on. So if you meet the test, then you meet the asset test, you can go ahead and file for an offer and compromise. The big scam area going on today is with the offer and compromise, or the debt settlement, or the pennies on a dollar. If you don't call us, be very careful. If you're talking to another party, find out if they're an attorney, an enrolled agent, former IRS agent, or a CPA. If they're not one of those, they're not going to tell you. They're a salesperson trying to get your money to determine how much they should charge you to work the case. Then at the end of the day, the person who works your offer and compromise picks up the case and usually finds out you weren't eligible for it first. So be very careful on offers and compromise. If you're going to submit an offer and compromise or a payment agreement, or you want to be put in hardship, you should have somebody look at your current financial statement to make sure you meet one of those criteria. Because if you don't, you're going to have a really bad day at IRS. And that's the truth. So whoever you're talking to, whoever you want representing you, make sure you send the financial statement to that person to look at it and tell you what program you're eligible for. Anyway, my name is Mike Sullivan. You can contact us below if you want. If this was good information, just give me a subscription. I'd really appreciate it. By the way, leave questions, or you want me to do YouTube, leave a comment for me. And if you think there's any way you want to say, hey, Michael, here's a good idea for YouTube, I'm welcome to hear that. Thank you very much.